Welcome to today's market report.
World shares slid on Friday, pressured by uncertainty about the conflict in Ukraine and expectations the Federal Reserve will hike US interest rates next week. The Nasdaq and the S&P fell, weighed down by tech and growth stocks. Oil prices settled up for the day, but down for the week in volatile trading. Investors kept their focus on Ukraine, where Russian forces bearing down on Kiev regrouped northwest of the capital. Ukraine's President Zelensky said his country had already reached a strategic turning point in the conflict. The US announced a ban on imports of Russian seafood, vodka and diamonds, and made it harder for Russia to access funds from the International Monetary Fund as Washington and its allies ramped up sanctions. Financial markets have swung wildly during the war in Ukraine, now in its third week, as investors also braced for central banks to tighten monetary policy to tame inflation. Just as the global economy begins to slow, US consumer sentiment fell in early March by more than expected on inflation concerns, according to a Friday report, while data released on Thursday showed consumer prices in February notched their largest annual increase in 40 years. Next week, the Fed is expected to begin raising interest rates, and the Bank of England is expected to continue its rate hikes, especially after January's economic growth numbers from the UK came in stronger than expected. While investors have expected the Fed will likely begin raising interest rates next week, there is still a lack of clarity of how far and how fast the Fed moves from there. With the market taking action in the form of volatility and possibly reducing demand, the Fed may not have to move as quickly. Still, the pace of inflation will be the key driver of policy changes for the better part of this year. The GBP-USD pair witnessed good two-way price moves on Friday and was last seen trading in the neutral territory, just below the 131 round figure mark. Euro-dollar consolidates near the 110 level.
This is today's market news. Thanks for listening. We'll see you next time.